Boris Schlossberg, Managing Director at BK Asset Management.
BK Asset Management's Kathy Lien.
Hello. Good morning, everyone. Let me just center my camera. Make sure everything is looking good. Good morning. Say hello if you can hear my voice and see my screen. Give me one more second. I'm going to make sure I put up the chat box in a different screen so I can follow everything you're saying. Good morning. Hello. Happy Monday. I hope you had a nice weekend. Am I in Hawaii, Simon Booth? I wish my office was in Hawaii, although it's, kind of, I'm kind of torn between that because I love Hawaii, but the time zone for traders is just so bad that I can't ever imagine living there, even though I would love to. West Coast, California, when I'm out there is already pretty bad. And it's just terrible when you're in Hawaii. So I do wish I was in Hawaii. Maybe you're in Hawaii. Good morning, Cheryl. Good morning, Peter. Good morning, Rick. All right. Good morning, everyone. I am happy to be back in my office. We had a fantastic trading week for those of you that are BK traders. As usual, I tend to do very well when I am on vacation or off the desk, although I was working all week. But I think just a different trading environment really helps me. And, I think it's interesting because I've been working on some, psychology content. And I think, sometimes when we're sitting in front of the computers too much and we're watching the price action too much, I think it negatively, even for someone as seasoned of a trader as me, can negatively affect my trading. Because when you're kind of laser glued to the screen, it can lead to one of two things, which is over trading, or you get too caught up in the price action at every tick up and down that you end up either taking profits too early, or basically taking profits too early, or taking your losses too early. Now, for me, first of all, let me know how many of you have fallen victim to that, where if you find yourself glued to the screen and watching the screen too much, you actually trade worse than if you put your trades on and you go about your day and do other things. Let me know if that's true. Give me a yes or no in the chat box if that's ever happened to you. If actually being glued to the screen is worse. Now, for me, I don't have the problem really of over trading. The problem for me is that I do, because with my trading, especially towards the end of the week when we've already made our 100 pip target, I trade much more defensively, which means that I'm just protecting my profits. So I won't let my trades run. So even if it goes a little bit against me, I'll close the position because I'm already I think it was by Tuesday or Wednesday, we're already up 140 pips. So my target per week for Zip is 100 pips. And at that point, I'm only trading because, our members want my ideas, but I tend to close the trades too quickly and they end up working out later. It's simply because I don't want to be exposed. I just want to protect my profits. But when I'm away from the desk, and this is part of the reason why Asia is such a lucrative trading session for me, is because I put on my trades And oftentimes, either they work quickly, or if they don't work, I carry them overnight. I go to sleep. I wake up in the morning. Sometimes you'll see me post on social media. I love waking up to profits. And the reason for that is because I'm not watching the charts. I'm not watching the charts. I'm letting the trade do what it's supposed to do. I'm letting it breathe. And that's why, oftentimes when I'm away and I'm on vacation, first I'll put on the trades, and then I'll go into, I'll go to the pool, and I'll spend time with my family, and I'll let the trades run, and that tends to work out much better. And so, I'm not sure if that's true for all of you or many of you, but I feel like sometimes it's important to understand how you are as a trader, your fallacies, your mistakes, things you could do better. And my long-time traders here in this room, if you're with me, you'll know that when I go on vacation and I trade, it's usually the best trading week that I have all year. This is not the best trading week I've had all year, but although the year is very new, but it definitely was a pretty good one. Okay. So welcome everyone. Let's talk trading. And there's not as much to talk about this week as there are other weeks. And the reason for that is because we don't have a exceptionally busy economic calendar. We have, this is the last week of the month. So usually at the last week of the month, unless, we've got some quarterly numbers coming up, things tend to be a bit quieter. We don't have much in the way of market moving data. But then again, my friends, it really hasn't been about data, right? It's really been about headlines. Headlines have been driving the show, and it's all related to tariff headlines. Now, I don't know if we're going to, we never know if we're going to get tariff related headlines every week, but the deadlines for tariffs are coming. And that is very, very important. Because as we approach the deadlines for tariffs, we will inevitably have a lot of questions and attention about the tariffs. And so we are in the last week of the month, but next week, March 4th, which is actually just Tuesday is the 30-day reprieve that Trump gave for Canada and Mexico's 25% tariff. That's Tuesday, not tomorrow, but next Tuesday is when that deadline is, March 4th. I'm going to put this into the box, and I'm going to pin it. So March 4th is the Canada-Mexico tariff deadline. And I'm going to pin this. Where is this? Maybe I'll show up in a second here. Where is this? Okay. March 4th is the Canada-Mexican tariff 25% deadline. March 12th is the steel and aluminum tariff deadline. So that's the 4th is a Tuesday, the 12th is a Wednesday, and then April is when we have those reciprocal and auto and pharma and chip deadlines. So while this week there's less in terms of data, because we're getting closer and closer to these deadlines, and this is what I read an article on how you should stock up for the tariffs, but these things are perishable, and so I would love to buy bananas and avocados, unless you have a magic way of freezing them and turn. I don't even know if guacamole freezes, but I can tell you that a lot of these things are perishable. But anyway, what am I getting at? I'm getting at the fact that next Tuesday is the Canada-Mexico tariff deadline. So either something's going to have to be said this week, or questions will be asked this week, or it's going to come down to the 11th hour. Like when we had the first deadline was announced, it came down to the 11th hour, and we're going to see those tariffs implemented, and then they were pushed. So this is really going to be front and center. Headline risk is going to be front and center, and this is part of the reason why I think that the dollar could recover. I don't. This is a. I think this actually. I actually updated this. Yeah, I think the dollar is at a near-term bottom and prime for a bounce. And the reason for that is because we are getting closer and closer to those tariff deadlines. And remember, generally speaking, the tariffs are pro-dollar because it hurts everyone else. It benefits the U.S. sort of, if you believe it. But anyway, from a market perspective, it is positive for the dollar. And the U.S. dollar has had a very, very sharp fall. I mean, if you look at dollar yen, let me just get rid of all my drawings and indicators and everything. You can see that since the beginning of the year, it's pretty much been a nosedive. Where's my arrow? It's pretty much been a nosedive in the dollar since January 2nd. Nosedive in the dollar. And so, you know, if we draw a horizontal line right here, this is kind of like a prime place for a potential bounce. Right here, support here, support here. So we've had a very significant sell-off in the dollar. And with no major data to really threaten the dollar, hurt the dollar this week, we could get a rally. So I do believe that we could be nearing a bit of a near-term bottom in the dollar. And we kind of see that in some of the other major currencies too. Flame out candle. This is euro dollar. Classic flame out candle. Pound dollar hits new year-to-date high. Looks like it's flaming out as well. And we see, you know, dollar Swiss bouncing. Aussie, not so much, although, you know, it does look like it's a little bit of a reversal CAD pattern. The commodity currencies definitely not as much. And but definitely, I think in euro, we see the flame out candle. Pound dollar, we see the flame out candle. And dollar yen, we definitely see the potential for a rebound here off of nothing more than this March 4th deadline coming. That, you know, in the next couple of weeks, we're going to get a lot more of a focus on the tariffs because those deadlines are coming and we need to know, is it happening or is it not happening, President Trump? Maybe Canada will say something first and say, we're starting to reach an agreement. I have no idea. Maybe it will be, or, you know, they're saying we're preparing more reciprocal tariffs, or the U.S. Trump will say it's coming. I have no idea. But if it's really going to happen, and I think it's going to come to the 11th hour, that uncertainty could lead to a rebound in the dollar, and this is dollar yen, and you know, definitely that's part of the reason why dollar CAD, even though the other ones look like it's flaming out, dollar CAD definitely looks like it's finding a little stability above 140, 150, and it looks like it could move higher. So keep an eye on these because even though we don't have much in the way of data, we have a lot of potential tariff-related headline risk. Also, this is after that, but on March 4th, we have the Canamex tariff deadline. On March 7th, that's going to be the next non-farm payrolls report. And as you all may or may not know, you know, there's been a tremendous, I mean, how could you ignore it, right? There's been a tremendous amount of federal layoffs. And actually, you know, I'm even seeing not only federal layoffs, but just, you know, layoffs in the private sector in general, probably in reaction to some of the federal contracts, things like that, you know, prospect of slower economy, all of that is happening. And so on March 7th, we get non-farm payrolls. And so that non-farm payrolls report is going to be very, very important. Now, if it ends up being ugly, you know, of course, we could have a very ugly reaction in the dollar. And it'll be a tug of war between tariffs and non-farm payrolls. But the tariffs come in the beginning of the week, non-farm payrolls comes at the end of the week. And so that is what I think a lot of traders and investors will be kind of thinking about and preparing for this week. This week, we'll look at the calendar. We don't have much in the way of data. But because we don't have much way of data, this is that kind of possibly the calm before the storm, although we never know if it's the calm because we could certainly get headlines from Trump. But it's the calm before the storm of the March 4th tariff deadline for Canada and Mexico, the March 12th steel and aluminum tariff deadline, and also in between that, the non-farm payrolls report. So there's a lot going on. And there's a lot, like Simon said, having to report by email what you've done every day. And there's a lot of, who knows what's going to happen with all that stuff. But, Trump is wreaking havoc on stability around the world in terms of outlook. And no one's going to like that. And that he's really causing a lot of uncertainty and potential volatility in the markets. Maybe not so much this week, but certainly in the next couple of weeks. But for the time being, I'm bullish dollars. I'm bullish dollars because we don't have much in the way of U.S. data, and we don't have too much going on that's going to affect how the market looks at the U.S. economy. This week, in terms of data for the U.S., we only have personal income, personal spending, PCE deflator, durable goods towards the end of the week. Most of this, we have a whole bunch of Fed speak, but we know the Federal Reserves aren't going to tell us anything new. That, they're all data dependent. They're all in wait and see mode. So I don't think any of that is going to be groundbreaking. We have durable goods orders. They're supposed to be stronger. There's nothing to predict durable goods. They're supposed to be stronger, but the outlook, I think, is definitely going to be weaker. Housing market activity, I don't think we're going to see much activity there with interest rates, rising quite a bit over the last couple of weeks. But the main event for the dollar is going to be on Friday, when we have the personal income numbers, personal spending numbers, and the PCE deflator. And, these are not, like, once again, these are not game changers for the dollar. They're not going to be that interesting. So I do believe, as I showed you in that dollar yen chart, that we could get a rebound in the dollar in general. Now, if we flip over here to Japan, I'm neutral the yen this week. The main focus that we have for Japan this week is going to be the Tokyo CPI report. The Tokyo CPI report is, the inflation report for obviously the biggest city in Japan. And this comes, quite a bit before the national report. So market likes to look at this quite a bit. And you can see the market is looking for weaker inflation pressures. Unlike the rest of the world, Japan is expected to report weaker inflationary pressures. And if that's the case, that would be bearish for the yen, because it would confirm what BOJ officials have been saying, which is that, they want to raise interest rates, but they're in no rush to do so. And so that would reinforce the whole positive dollar, bearish, neutral yen story. I'm bearish euros. We had that flame out candle in the euro dollar. Look at this flame out candle. And this flame out candle happens right around the same level as this resistance here. We had the German IFO report released. Let's see if we got a fib here. No, the fib is above the level. But we had the German IFO report released this morning, and that was weaker too. So euro's finding resistance. This one definitely looks to me and wants to go to 104.25 to the next fib level on the bottom. We also had German elections. The German elections, came out in line with expectations. I don't think there was any surprise related to the German elections. Basically the CDU, CSU, SPD coalition seems very likely. And I don't think that, there's going to be too much. And I think for the most part, it's just going to be a continuation of status quo, though it seems like, this coalition that's expected is going to allow them to continue to promote any new initiatives. I don't think the political, unlike the US, where politics is really is a huge game changer during this presidency. I don't think in the German leadership that it's really going to change much. So anyway, euro looks like it's flaming out. We had the German IFO report that came out weaker this morning. We don't have much in the way of data in the front of the week. If we look at the calendar for the euro, we have German retail sales numbers, German sorry, it's the end of the week. Let's go to the top of the week. The German IFO report was weaker. Inflationary numbers were right in line with expectations. Tomorrow we have final GDP. Final numbers don't really move markets all that much. On Wednesday, we have the GfK and Consumer Climate Index, which I actually think is going to be weaker. And then on Thursday, we don't have too much going on. It's only on Friday when we have some interesting German data, and that's German retail sales as well as the German labor market report. And according to the PMIs, employment activity declined quite a bit, so those are going to be weaker. And then we also have the German preliminary inflation numbers, which, according to the PMIs, we also have weaker price pressure. So overall, the German data is expected to be softer, even though the market thinks that there could be a rebound. So I think, according to the PMIs, we could, especially since those pieces of data are not due until the end of the week, I think that we could see a pullback to euro, at least to this fib level and probably a little bit below that. Now, I am bearish pounds. We also don't have much going on for the pound this week, but last week we had mostly weaker data. This looks like kind of a consolidative candle, less of a flame out candle than euro. Euro definitely looks like it's more of a flame out candle than sterling. With fibs, we do have some support at 126.12. That's a fib support in pound dollar. Keep an eye out for that. Pound dollar is really just going to move on the market's appetite for US dollars. And as I said, I think we could get a bit more of a bounce in the US dollar this week. So that's something definitely to look out for. But we don't have anything in terms of UK data. So we're just going to be watching levels. Either the high of today is broken or this fib level on the bottom is broken. That will determine the next direction for pound dollar. Next, we have the Australian dollar. I'm also bearish the Australian dollar. We've had kind of weaker Australian data, except for the jobs report, but the RBA, is expected to cut interest rates again. Aussie's pulling back. I'm not as bearish Aussie as I am some of the other major currencies because, they did have that very, very strong jobs report. But I think that, I have a little bit of a risk off view, even though the stock market is up today. And I do think that, this is I think that this is a sign of weakness and a potential pullback in Aussie down to 63 cents, maybe even lower. We'll have to see what the risk appetite market is. But I'm bearish Aussies, less bearish than euro, for example, but still bearish Aussies. In terms of Aussie data, we only have the Australian inflation report tomorrow night, and that could actually be weaker it could actually be stronger because the PMIs reported stronger inflation data. The Canadian dollar, I'm bullish, but actually this should be neutral. I'm bullish neutral because we are counting down to that deadline, and it's going to be hard for the Canadian dollar to rally off of that. But we had very, very good data. The jobs report was good. Other numbers were good. So this is more like neutral bullish. Technically, however, I do think that there's more upside than downside opportunity in the Canadian dollar. Kiwi, I'm bearish as well. We did have very strong New Zealand retail sales numbers this morning, but it didn't seem to affect the New Zealand dollar all that much. We're seeing a similar pattern as Aussie where it's consolidating. We're just going to have to wait and see whether it breaks below this fib level here at 57.20 or takes out a new high. I'm inclined to believe that we're going to see a correction in Kiwi dollar, but we'll see. We don't have anything else besides the retail sales report that was released from New Zealand this week to affect the currency. Now, Swiss franc, also signs of a bit of a bottom in the Swiss franc, although we need to recapture 90 cents to have more of a significant bottom. We do have some Swiss data on the calendar this week. We have Swiss retail sales numbers, which are going to be important, although that's expected to be a little weaker. And then we have Swiss GDP numbers, which are also expected to be weaker as well. So the combo of both weaker Swiss data and the possibility of the dollar bouncing on tariff headlines could lift dollar Swiss a bit. So we'll have to see about that. But, as I said, there's no real major data this week except for the German data at the end of the week. Someone asked about the PCE deflator. PCE deflator is interesting and it's important, but it's really not a game changer for the Fed. We know that inflationary pressures are sticky. We know that inflationary pressures have risk to the upside. And so that's probably, and until we see the data, I don't think the PCE deflator is really going to affect that all that much. So Oz is a good question. Aussie dollar, why isn't it rallying? Because the rally in gold and silver. So let's look at this. So we got Aussie here, right? And let's put up gold. Okay, so we got gold here. And I'm just going to change this to gold. It's not dark enough. All right, and then let's move this to the left panel. Okay, so you can see that historically, Aussie, which is the candlestick, is supposed to have a positive correlation with gold. But you can also see from the chart that it hasn't been the case, right? I mean, basically gold's been in a one-way uptrend, and Aussie's had up, down during this period. And the reason for that is because even though Australia has a lot of gold, the problem they have is that Aussie is also seen as a risk currency. And so when gold is rising because of uncertainty, like tariffs and things like that, it's difficult for Aussie to mirror it completely. Now, Aussie is seeing a positive relationship right now, but it's not as reliable as some of the other relationships that we see. We do see, you can see the breakdown over here, but it's certainly a factor to watch. I think gold will continue to rally. I think that it's definitely going to test 3,000. I think that it's definitely moving upwards. This is a good question. He says, I think gold is too high to buy. It is very difficult to buy things when they are at record highs, but usually the trend is there for a reason. And so I usually advise people when they're trading to, go with the stick with the trend until it bends. And so one of the ways to do that is, I was actually examining this as a potential video strategy to do. Let me just hide some of the things that are unnecessary here. I was just looking, and it's not something that's completely valid. It's not something that's completely perfect, but I'm not trading this actively, but what I have found is that when we get a dip, this is a 4-hour chart in gold. When we get a dip below the 50 SMA and a move back above the 50 SMA, that could be an opportunity to join the trends. Now, we don't get that very often, but sometimes you'll get that. And I was looking at that also with the 20 SMA, which is a little bit, which is a little bit, more imperfect. But you could use these estimates. This is not a strategy that I'm advising you, but it was a strategy that I'm examining on the 4-hour chart to make, if it drops below the moving average and it moves back above it, and it's still above the 100 SMA, that perhaps it's still a good buying opportunity. You get a lot more signals on the 20 SMA than you do in the 50 SMA. But here, let's see, here you have a winner. Here you have another winner. This one is just a live trade, but depending upon how much of pips you want to take, that would have worked out. This one would have worked out as well. This one, and your stop maybe could be at the 50 SMA. This one may or may not work out depending upon how your stop is placed. This one, where you wait for a drop below the 20 SMA, rise back above the 20 SMA, would have worked out as well. Same story here. This would have worked out. So what do we have? 1, 2, 3, 4, 5, 6. 6 or 7 trades. Only one would have been a loser. This one, there's too much of a mess here, so you want to clean moving averages. Let's see if it works on the downside. So this one, it would have worked. So rise back above the 20, below the 20, back above the 20, and then back below it. So this one would have worked as well. This one, it never went back below it. Let's see, what else do we have? This, it never dropped back below it. No trade here. I'm examining it. I encourage you to look at it yourself. I haven't looked at it long enough to see if it's a valid strategy, but it is very hard. My point that I want to make is that it's very hard to buy an instrument when it is at a record high. So you need to use your technical indicators to help you identify levels to get in when it is at a record high. And still, my best advice is to stick with the trend until it shows more significant signs of weakness. What do you think about the strategy? Let me know in the chat box what you think about, this strategy that we're looking at in gold on the 4-hour chart. Let me see if there's any questions. I have no opinion about silver. I'll let Boris answer silver. You want to answer silver, Boris, since you popped the question online?
I think if gold goes higher, silver follows. Silver always is a follower. And yes, there's going to be, if we see gold above 3,000, silver has the greater leverage because it's a lower cost product. Therefore, any kind of an increase in silver is going to be on a percentage basis better. I'm still bullish gold, so I think gold goes higher, especially if chaos continues to occur. I think this is what people are really underestimating, in my opinion. Is there's a lot of change. Many people will argue it's a necessary change. I don't disagree, but any type of change creates lots of dislocation and chaos. And gold is very naturally the one safe haven that everybody is running to, which means that what I mean by chaos is we may have problems with U.S. Treasury auctions. We may have continuously higher prices that are just going to keep interest rates higher. Interest rate expense is now becoming the single biggest item budget. One of the most important things I read, which is really interesting from a macro point of view, is when in history, whenever the empire has to spend more money on servicing its debt than on its military, in other words, where its military budget becomes smaller than its interest rate service budget, it loses the empire. We're very close to that point. And so, all of those things I think are very, very bullish for gold long term. And obviously, silver just pulls up the.
Now, the only wrinkle I have to throw to all this is that if we have a sudden resolution to the Ukraine Russia war, that could lead to a little bit of a pullback in gold and relief rally stocks. It's not going to remove the other factors we've been talking about since the beginning of the year and what tariffs mean for the global economy and all that other stuff. But markets, this war has been happening for a very long time. So the markets will cheer it just regardless. And that could give us an opportunity to buy gold at a lower level. And if it does, I obviously wouldn't be buying gold outright. I would be using a setup like this to give me an opportunity to buy gold. Because what if it ends up like something like this in this mess here? Then it ends up in this mess. You want it to clarify and get back into here, this type of phase, and not because this is still within the uptrend and not be in here before we get over here. So you want to make sure that you use your technicals. If we do get like a positive headline on the war, you want to wait to buy gold using your technicals and not just say, okay, it's pulling back, I'm still bullish, time to buy for no reason other than your emotional reason.
Yeah, I actually agree. I think that's a very, very good counterpoint. And we should certainly be mindful of the upside risk here, because that's very true. A peace in Ukraine is a massive macro relief, at least for the near term. It takes away a huge amount of defense spend on Europe. It creates possibility of reintroducing Russia and its commodity flow back into the global economy, which is also very deflationary and disinflationary. All of these things are very, very positive. On the other hand, if the tensions get higher, we all know that Trump can turn on a dime, and if he doesn't see cooperation out of Russia, he may just flip on Russia, just like he flipped on Ukraine, and all of that will create, I think, some interesting tension. It's very, very hard to say. The point is that there is very little visibility at how things go, because so much is really contingent on a few players who can go either way. But it's definitely going to be
I put this post up by Marvin, because this is what I'm saying. You want to be careful. You don't want just to put an arbitrary price level here, because if we do get peace, we can drop right through that and then stay below it before we get this a positive setup like I have here. My point is, you don't want to arbitrarily stick your hand out trying to buy at some price that you've picked. Maybe this is a fib level, maybe it's something that's helpful, but you want to wait for it to stabilize and using your technicals to look for the opportunity to get it. And this is what I'm referring to. Because otherwise, if you just pick a price, you're just sticking your hand out.
Yeah, I like that, because then you know what happens when you stick your hand out? It usually gets slapped, right? That's usually what the market will do to you. That's a good point. I like that. Yeah, generally, look, wherever we do it, whether it's a 2-minute chart, a 2-hour chart, or a 2-day chart, we're always looking for near-term confirmation of what we want to do. And when you kind of like what you were saying, when you just sort of make a bid underneath the level, you're just trying to, you're hoping the train stops in front of you. It's going to usually most of the time roll right through you, So always much more helpful. It's better to be late and correct than early and incorrect, because we all learn very much in the markets. So that's the game plan.
Okay, so that's all from me. Any questions before I turn it over to Boris? Boris, I just have to remind you that we got that 10:30 call. So whatever you're doing and trading, we're gonna wrap up by then.
Can you remind me on chat, because I've totally forgot whatever the hell we have as usual. So yeah, that's fine.
Otherwise, any questions for me? If not, are we ready to rock and roll and trade with Boris?
Right, 100%, guys. Hang a second. Let me just share my screen. Let me just get my screen going. Window share. I got such cool stuff today. I'm not even going to bombard you with any commercials. I'm just going to talk to you.
So we got a question here from, we've got a Stammer visiting visit. Well,
yeah, I don't know if you answered that question. That was an interesting question. There was a question whether, is there a trade in UK? Or just generally, any thoughts about Starmer visiting Trump, and what do you think of that's going to happen?
The UK has not been in the line of fire for tariff threats, so I don't think that anything negative is going to come out of that, in my opinion. But we'll see. Yeah, I'm not expecting anything particularly negative out of it. Question, do you guys have the issue of think market reloading frequently? I experienced it many times at the moment. I want to replace a trade. This is so irritating. No, I mean, think capital is what we look at. And I haven't seen any issues with it at all this morning. I don't know if it's your computer.
Guys, honestly, I've been trading everything through TradingView. And you can trade think capital through TradingView. I recommend you try to do that, so it doesn't, botch up your, maybe there's something going with MetaTrader or whatever you're doing. It's connected to TradingView. It makes it super simple. You trade it right off the chart. You can use Kathy's zip indicator. By the way, let me put up the,
I only trade on TradingView as well. I think it's a very good recommendation. Especially if you're having issues, you definitely want to try the other platform.
Okay, I just put in a link to if you guys want to try out the service and get the indicators, you can get all those, including scalper, which is what I'm showing you guys right now. Okay. Well, thank you, Kay. Good to have you with us, guys. I will. As I said, we're gonna chill today. Everything starts tomorrow, hardcore for us. But I just want to show you this stuff that I've been doing today. Maybe before I even show you, let me just. This is not a flex. This is just a fact. Hang on, I'm pulling up. I want to do custom. Hang on a second. Custom range. I want to show you because it's literally. I'm not doing this for a flex. I'm doing it strictly to show you. Oh, what the hell happened? Oh, sorry, 23rd. Bear with me a sec. Bear with me. Okay, cool. Now I'm going to share this with you guys. Hopefully you guys can see it. Let me see if you guys see this on the screen. Okay, yes. So my TradeAvate account, I literally took the slice from last night to today, all my trading, just to show you what the results are, because then I'm going to go backwards and show you the strategy. But I wanted to convince you that it's worthwhile. It's really worthwhile to do this. Why is this like? Oh, here it is. Okay, so 28 trades 22 winners. This is the cumulative curve without fees, with fees, a little bit of dips over here. You see tons and tons of trades, trading NASDAQ, gold, S&P, generally keeping it to one. Okay, ignore this. This is just me going nuts, but let's ignore that. Me losing my shit. But overall, you see just clip. Overall, I'm up to $1,000 on a $50,000 account. Count was like at 50. Now it's 51,000. That's where I'm going. Okay. So again, just to show you, this is not about, let me just take this out. It's not about, what I did last night. What I want to show you is how I did it, because that's really the most important thing, right? Don't you guys want to know how I did this? How I was able to achieve such consistency and such interesting trades? Give me a yes in comments. Let me know that you want to know what I did to take the BK scalper strategy and just convert it into a super refined scalping machine with all those trades. Okay. I want to see more yeses. Let's go. That was in one day. Yes, Ron, that was in one day. I literally showed you 23rd, which is last night. It was actually not even a day. It's from last Sunday. So to me, we're Monday. I'm in New York, right? So I start trading Sunday night. So this is from last Sunday night, 2000 hours. So 8 p.m. New York until today. Now, mind you, I wake up at 5, so I'm trading from 5 a.m. in the morning, whatever. I'm a degenerate. The point is, it's not so much. It was just enough trades to kind of show you the statistical viability of what I'm trying to do here. Okay, because when I'm about to show you, I'm sure some of you are going to just go, maybe not. Okay, so it's really nothing more complicated, literally nothing more complicated than just taking only the green and the red signals in the three instruments, in NASDAQ, in gold, and in the S&P. Okay, just taking only those three signals. Also, by the way, taking the how come this is not showing? Hang on a second. Okay, counter trends, and showing the counter trend and the counter trends. Taking the strong trades up. You can literally see. You see me. The blue arrow is the buys. The red is the sells. The blue is the buys. The red is the sells. The red is the sells. The blue is the buys. This is a counter trend signal. This is all I'm doing. However, I had this really interesting epiphany. Now, I don't want to go into like the whole convoluted conversation that we had privately on Friday in BK, but out of that conversation came out this very, very simple, elegant idea. Basically, if you think about the green signals, the red signals, generally we know they're about 70% accurate, kind of like on a 1-to-1 ratio, right? So, if 70% of the time they're going to go usually one-time risk. So let's just imagine this is 61. What is this? This is 61.5 to 60. What is that? Is that really 60? Is that a $3 risk? Okay. What is that? 61. Whatever. Let's just say it's a $3 risk and it goes $3 forward. 70% of the time it's going to extend whatever is the length of the candle. If the length, let's say the length of the candle is 1, 70% of the time it's going to extend 1, just for argument's sake, right? Okay. You guys with me on that? We know that is relatively an accurate description of the statistical variance of all these signals. Because what are these signals? Everybody who's new in the room here, let me explain to you. It's a super simple idea with a whole bunch of quantitative stuff behind it. The blue line is the 8-period SMA. The red line is 200. Blue above red, we're positive trend. That's step 1. We only take upside trades, with the exception of let's just focus on trend for right now. So we only take positive trades, take trades to the upside in trend. How do we take the trades in the upside? When price dips below the 8 and then comes back up above it. Dips below, comes back above it, means they're buyers into the uptrend. We buy it. That's step number 2. What's the last final thing to make turn the thing green? It has to have a positive slope. The last 3 candles prior to the signal have to have a rising slope to it, meaning that there's there's this higher lows against it. Once you have those 3 conditions, one above the other, positive trend, dip below, move above, positive slope, I get the green triangle on the upside, the red triangle on the downside. If I want to do, I think we had a negative. Where's it red? Where are my red triangles? Was it here? Yeah, red triangle over here in the S&P, right? Same ideas. That's it. There are 3 things. If the thing calculates everything for us in a dashboard, which I keep hidden because I just don't want to overwhelm everybody with all the quantitative data. But basically, it does all this stuff. It just keeps everything quantitatively, and then it puts it out to us in this beautiful single little triangle as a signal. Okay, so the insight that I had that was kind of interesting was, well, we know that these are pretty good, accurate signals. We've worked very, very hard on trying to refine them and make them as valuable as possible. And by the way, last thing I want to say is that most of the people in my group, including me, we converted to the 2-period SMA. 2-minute period instead of the 1-minute period, because the 2-minute period tends to be less signals but more robust, more accurate signals, because it also gives us a little bit more time to be able to prepare and control trades. Okay, so that's the bottom line of BFF Scalper. We've been trading this forever. You guys have watched me days in and days out. I think I'm coming up to probably like 1,000 lives at this point over the history of this thing. Certainly 100 lives since we started refining BFF Scalper to its function. But then I had this really interesting idea as I started looking at the charts, and I was kind of fooling around with a lot of stuff. I realized that if you're not greedy, and this is the key thing, you can trade this as a greedy person. And if you want to trade it from a greedy perspective, you're going to get stopped out a lot. But when you hit it, you're going to hit it hard. You can say, I'm going to trade this for a 2-to-1 or a 3-to-1 risk-reward ratio. I'm just going to take this signal and make a 3-to-1 risk-reward ratio against the trade. And like in this example, let me just give you an example. So here you are. 54.7 is your entry. Your stop is 57, right? So let's say $3 stop. I say I want to go for 2-to-1, which means I want to go $6 down. So it's 54 down to $6 right over here. 47, boom. You're done. You make 2-to-1. But that trade of 2-to-1, that's going to be a rare trade. It's you might get it like 40% of the time if you're lucky. That's the greedy way of doing it. The non-greedy way of doing it is I'm only going to go, regardless of whatever this, whether the signal is, whether this candle is $3, this candle is $1. By what I mean by $3 or $3 is the close of the candle to the high of the candle, which is where the risk line is. The risk line is always at the high of the candle or the low of the candle on the green side. Whatever that candle is, I'm just going to go for one single S&P point, 5 NASDAQ points, $50 in gold. I'm going to go for tiny, tiny winners all the time. And what happens there is that a lot of trades get done, right? A lot of trades get done. Now, the non-greed, and you see how you see me adding to like $1,000 over the last 12 hours by just clipping and clipping and clipping. $50 in gold, $100 in NASDAQ, $50 in the S&P, boom, 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 boom. So that's the positive side. Now I have to give you the negative side. The negative side is when you're wrong, you're going to eat it. You're going for 1 point. Like here's an example of something that could go really seriously wrong here. Let's do this. We got, let's see if this works. God, I really don't want to. Okay, I'm short this thing right over here. The stop is going to be all the way up here, right? That's the stop. And the target is just 1 point. Am I going to be able to make the 1 point? Maybe not. Yeah, and I'm gonna eat this trade probably a lot. I'm just gonna let's see if I can survive this trade. You know what? Fuck it. I'm just gonna get out of this trade. I don't want to trade this trade for for this larger size, because this is a good example of what not to do, which is your risk here is 52 to 60. It's 8 points to make 1 point. That's already quite that's already a very, very negative structure. So if I want to take this trade, maybe what I'll do is I'll just simply sell this right over here on the minis, on the micros. I'm going to sell it on the micros, and I'm just going to hold it over here because, if it's on a micro, it really doesn't matter. It's pennies one way, pennies the other way, to show you kind of the principle of the idea. If this thing makes a point, it'll make a whopping $10. Great. That's the negative aspect of it. You obviously, especially at the beginning of the open, when you have lots of volatility, if the candle that you're entering on is massive volatility, you got to be kind of an idiot. I generally try to be in a situation where my tiny little profit does not exceed more than 3.5 times the volatility of the candle. So let's say if I'm looking for $1 in the S&P, and the actual risk line in the S&P is $5 up, right? Then probably the smart thing to do is to just do the micro contract, because who cares? I mean, the point is it's a throwaway trade. You're not gonna do much. Doing it this way, what happens is in real life, first of all, a couple of factors. You are generally generating, just to give you an idea, one clean red or green triangle every half an hour per instrument. So that's if you're trading 3 instruments, NASDAQ, S&P, gold, you generally have 6 opportunities in an hour to make money, okay? And a clean stop, what I mean by a clean stop is it's like 3 times to 3.5 times your risk, and you're going to get clipped out. A clean stop usually happens 1 out of 8, 1 out of 9 times. So if you keep those ratios going, it becomes incredibly, incredibly effective as a day scalping strategy. As you can see, I'm up 1,000. I'm probably up a little bit more than $1,000 on this. I need $3,000 to fund the $50,000 account, and I made $1,000 overnight doing this, right? So, and obviously that's not it's an ideal scenario, and it's not going to happen all the time. But imagine, let's give ourselves a realistic idea that you're able to grind this out on a $500 a day basis across all 3 instruments. Mistakes, everything else, you're still kind of coming up like around net $500-$600 in a day. That's 6 days to fund it without ever coming close to getting stopped. Because remember, using one contract, you're just using one contract. You're not leveraging yourself to these huge ideas. Even if you're losing 3.5 times your risk on S&P, that's only $150. On NASDAQ, it's $300, right? On gold, it's, I don't know, was it $3.50? Maybe $200, whatever. Even if all 3 of them, let's imagine you had 3 signals, the market completely flipped around on all 3 things. You lose $200 on S&P, $300 on gold, $300 on NASDAQ. That's $600, $200, $800. You're still more than alive in the game. You have $2,500 of budget in the $50,000 account, and you can come back. You can absolutely come back. I think this is if for those of you guys who are looking to trade prop with me. Let me put up the Apex ideas. Make sure, by the way, Apex now, huge discounts still. They just extended the thing to 80%. So please get some Apex accounts, because this is the easiest way to do it. You can even do like one account for gold, one account for NASDAQ, one account for S&P, and just trade one instrument per account and get 3 funded right away. And then, you get 3 funded, and then you trade them live that same way in 3 separate instruments. So you really, really distribute your thing. A reversal on a losing signal? No, I don't reverse. No, like in this particular case, just let it go. Like this is the let it go strategy. You eat it. You got to eat it, because then you if you start getting into like I'm going to double up, I'm going to triple up, I'm going to start revenge trading. It's very, very quick to trust me. I did this at the beginning of the day yesterday. I put myself into a massive hole. I had to dig myself out of a $1,500 hole. So I'm up $1,000 after digging myself out of a $1,500 hole by doing this stupid stuff. So yeah, no, just be a grown up. Take it like a big boy. Eat your loss when it happens, because trust me, the next trade is right around the corner, and the next trade is better than the past one. They're there for the taking. They literally are there for taking. Look at how many frigging signals there are. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. This is from 3 o'clock in the morning, right? This is just NASDAQ. Excuse me, this is the S&P. Now let's go and look at NASDAQ. Look at how many signals there are in NASDAQ. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. This is from 4 o'clock. So this is what, 5 hours, 11 signals. Generally, this is what I'm trying to tell you. It's 2 signals an hour. And especially now, during the New York session, we should be in a reasonable situation where there should be about 2 signals. Again, just because it's 2 signals an hour doesn't mean that every single hour you'll have 2 signals. They're always lumpy. Statistics are always lumpy. Some hours will be 4 signals, other hours will be 0 signals. You have to accept the fact that not everything is going to come out like clockwork. But those are general operating principles that absolutely help you kill it by just taking only the quality signals that occur, right? And in this particular case, I was showing you also, I actually trade the reversal signal, because again, remember, what am I using? I'm using the risk line. You're always using the risk line, and even on the reversal side, watch this. So this is reversal side. Even on the reversal side, right? You don't need much. I'm looking for half a dollar. The key thing is, are you not greedy? That's really the question. If you're greedy, this is not a strategy for you. The strategy for you is to just take the signal, go for 3-4 times risk. Buy this at 64.5. Put a stop at 61 and look for 68, 69, 70. Like just load up 74. Look for 10 points. Look for 10 points. Yeah, this is probably the right thing. If I'm greedy, I'm looking for 10 points on gold. If I'm not greedy, I'm looking for half a point on gold. It's just 2 absolutely different styles of trading with different kind of payoff things. As a matter of fact, I would make the argument, if you're greedy, you're probably going to make more money than I will. Absolutely. It's just a question of whether it's not a question of who does better and what is a better way of trading. It's a question of who can do what. That's really the functionality of what kind of a psychology you have. The beautiful part about scalper is it can be traded both ways, as long as you know who you are and what you plan on doing and how it's going to play it out. Tough not to be greedy. Yeah, I agree. I mean, well, not tough for me. It's actually very tough for me to be greedy. I mean, actually, let's do a poll, because I'm really fascinated. Hang on, guys. I'm gonna put a poll here. I'm using 2 computers today just to kind of hang on a second. I don't want to do a Q&A. I want to do a poll. Hang on, what the fuck? Start a poll. Okay, sorry. What is easier? Greedy? Not greedy. Because trading is really about who you are, not what you do. All right, let me know. Let's do a poll here. Let's see what everybody says. Otherwise, first 15 minutes we came out. People are asking me, a little bit on the macro side. What do we think about gold? Am I bullish gold? Yeah, I still am bullish gold. I think we have a. Oops, sorry guys. We have a reasonable chance to run the 3,000. I really do. On not on futures, but on the underlying on spot. That's interesting. A lot of people are saying greed is easier for them than not greed. I must have just a kind of a different approach. I'm just not a greedy person. I never want to squeeze the last juice out of the orange, maybe because I'm just like not really material. I could give a flying fuck about things, except for computers. But I think, it really, really depends on your personality. It's fascinating. I'm surprised at how many people actually are much more comfortable on the greed side. So my answer to you is, if you're on the greed side, then go for the $10. Yeah, you're going to get clipped out a lot more, but when you hit those $10, you're gonna kill it. And there are a lot of guys who actually do the other thing that I'm absolutely incapable of doing myself, but a lot of people that do this really, really well, is you get into a trade and they will add to the winning position and just really, really milk it. So like, you're long here, right? It goes up, you add to the position, you hold your stop, even though this really, really tests your stop. And then, then you're triple long into a second wave of upside. Again, something only possible when you're reading the BK scalper correctly. So yeah, there's a lot of different techniques to how you can make this work. The key question is, who you are. As I said, it's much more important to know who you are than what you do, because you can do it 100 different ways. I'm actually curious. Oh, well, in the room right now, not greedy is winning by 2-1. Interesting. Go ahead, guys. Vote some more. I'm really, really curious. Sorry, could I run? Could I please run the 6 to 9 trades? Do you mean the trades that I did in the past? Do you want me to go through the trades that we did here that are on the charts here? Is that what you're talking about, Christoph? I'm happy to do that for you. There's nothing going on here. We might as well just do a little bit of trade replay. So let me show you the replays. This is gold. I'm just going to show you gold, and we can do something else. So here's gold. I'm going to do step by step, right? Boom, 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 boom. Actually, this one gets stopped out. I remember I'm in this trade. I'm stopped out. This is what I mean about don't worry about getting stopped out. So I get stopped out. Next trade over here. I'm long 64.3, and then the trade obviously makes the $0.50. You're good for $0.50. Next we go. Okay, I'm long here again. Long here again. Now remember, your stop, you're in at 68.5, and you got to put a stop underneath the risk line. The risk line, whatever it is, you got to respect that risk line. So it's 66, what is that? 66.9, 66.8. Your stop's got to be 66.5 probably. Just a couple of pips, couple of ticks below that. That's where you want to be, right? And boom, I get, a second trade gets done, right? And then what else do we have? Oh, and then we have the reversal trade. And then I did remember doing this. So the reversal trade is the exact opposite. You just get short 70. Your stop is 73, basically 74s, whatever, 73s, and you're looking for $0.50. Boom, done, right? And you can actually see all of this. You can see you can't do this in replay mode. It won't show you the marks, but it will show you the trades over here, right? And if you guys want to see it, let me just do one more thing to show you. If I go into here and I can show you trading execution labels, you can actually see the labels, where I'm buying, selling, selling, buying, right? You can see all those things. I don't want to pollute the charts because it's too much, but you get the idea. So does that help you guys to understand how how I'm being walked through this whole thing? So like right now, what do we got? 27 seconds potential red candle here. So we're going to go to gold, right? Going to go. This is the beauty of having a two-minute chart, is we can set ourselves up properly. Couple of things from a technique point of view that are so important, and I keep fucking them up. So trust me, nobody blows them up worse than I do. Number one, wait, motherfucker, until you get the signal. There's no signal, no trade. No signal, no trade. See, there's no signal, no trade. That's number one. That's like a sacrosanct rule. You break that rule, you're an asshole. And trust me, I'm an asshole half the time. The second rule is really, really tough, because these are 2-minute signals. Very often you'll be doing something else. You're not looking at it. You not quite focused on the idea. And I don't use alerts. I probably should be using alerts. People, by the way, have asked me that the 7.52, where are the alerts? They're all here, guys. The alerts are all over here. The 3 buttons, add alert, the whole alert menu, every single strong trade, buy trade, super trend alert, extreme counter trend, all of those alerts are all over here in the thing. Just click it, select it, and you're good to go, okay? Make sure you choose once per bar close, not just only once, but once per bar close, or once per bar. If you want to do it, it's actually, honestly, I think the better way of doing it, if you're using alerts as just a way to alert you to the possibility of a signal, do it once per bar. Because what's going to happen is the moment that alert shows up, it's the moment that signal shows up, that's going to create the alert notification for you. So then you can look at the chart and go, oh, it's setting up, and then prepare yourself. And if it's either going to complete and actually be a signal, or incomplete and not be a signal. But that's a good way of creating an audible alert. So I'm changing the recommendation. Instead of doing it once per bar close, do it once per bar. So that should be on the open of the bar. And that's going to give you a notification. But the point is that if you miss the signal, and then you're like, this thing is working, but I'm late, but I still want it. And, you're coming in late. And, when you're coming in late, you're screwing up execution. A lot of times it still works even if you're coming in late, but that's just bad practices. The single worst thing about this thing is to rush the trade before the signal completes. The second worst thing about it is to, when you miss the trade, to come in late, because then all your risk rewards are skewed against you, and you just kind of you are at the mercy of the market. Sometimes the market is merciful, but it's just not worth it. It's not a great setup. Here's what's going on as far as price action goes. We just turned super trend. We just turned super trend negative, right? I don't know if you guys saw my tweet today. I am perfectly convinced that we're going to have a 30% crash in the market this year, and probably in the spring, for all the reasons that I laid out in my tweet, which I already forgot. But number one of them was, what the hell was my number one? Jesus. Okay, let me. Maybe I should actually. Where is my thing? I already forgot all my good reasons. Here we go. Echo data has already started to falter. Walmart, which is, in my opinion, kind of the canary in the coal mine because it services everybody in America, had great numbers, but they've guided forward slower. The consumer is slowing down. Microsoft just canceled a whole bunch of capital investment initiatives. They're not going to spend as much money on AI as everybody thinks, because DeepSeek has completely revolutionized the model, and you don't need to spend $1 trillion to have a nuclear power plant to be able to have quality AI. So chips and all of that, which has been a major driver for investment, really started to come back down. Love it or hate it, they may be the biggest idiots in the world, but they earn $100,000 a year or more, and that $100,000 a year disappears when they're being fired. So the more federal workers are being fired, the less money there is in the economy. Massive negative multiplier. It's not like like putting minimum wage people on the floor. It's putting very wealthy consumers out the door, and that's going to be a huge negative, because in the America right now, 10% of the population is responsible for 50% of the spend, more than 50% of the spend. And the federal employees, you better believe it, they're part of the 10% of the population. Sticky inflation, because supply chains are all going to be out of whack now with the tariff controls. And last but not least, Buffett has got the biggest cash hoard he's ever had in his life. And Buffett is really wrong about getting out of the market when it gets overvalued. So all of those things kind of make me think that I think we have a big corrective move. I may be completely wrong, but that's my macro call. And I think, it's definitely possible. I'm happy to hear, by the way, I'm actually happy to hear counter arguments on this. In the meantime, greed making a comeback here at 42% versus 58%. So a negative trend in NAS, negative trend in S&P. What does negative trend mean for those of you who are new? That means super trend. Sorry, super trend. Super trend candles is when the moving averages start to really separate. When the short really pulls away from the long by at least 1/3%. That means there is serious selling now. People are seriously positioned one way. In this case, they're positioned to the downside. So probably we're going to get red triangles, maybe 10 minutes from now, half an hour from now, whatever. That should be pretty good signals for us to the short side in this clip it, make it, scalp it, push it strategy that I'm advocating. And of course, those of you who are greedy motherfuckers, you should all have done really, really well, taking this sell signal here for a whopping 30 S&P points, which is $600. No, 50. Yeah, $600 per contract. Would have been a great trade. Anybody short? I'm actually curious. No? So no ciggies. I'm sorry, guys. It's a little bit quiet. I'll hang with you for like 5-10 more minutes. Then the queen wants me for some meeting, which I don't even know. I don't even know what meeting I have today. Ugh. Sometimes I really feel like, not that in any way, shape, or form I'm comparing myself to him, but I really feel like Jokic, where like all I want to do is just trade. All I want to do is run my horses, and I have to do all this stupid business stuff, which is just annoying. Recession, more rate cuts. Yeah, but remember, it doesn't matter. Rate cuts ultimately you got to crash 30% before you start to bounce back. My argument is I think we're going to be crashing. Okay, good question. A lot of people you got Dr. G got five points done on what? On the stuff. Okay, question here. How do you get the trading section with your presets in it to the right of your screen? I'm just new. Great question, KP. All right, let me show you. Okay, so here's how you do this in TradingView. You see this little icon over here, right? This is your preset icon. I'm actually going to, let's delete this. Let's delete all my presets. I'm going to delete this. Yeah, I want to remove this. I'm going to delete this. I'm going to delete this for every single instrument just to show you how to do this again. Okay. All right. So right now we are looking at the S&P, right? And let's say for the S&P, right? The S&P, I want my take profit is always going to be 4 points, right? And we want to put a stop loss. Let's just put it at 4 times my take profit. We're going to adjust it manually, but let's put it like this as a kind of a preset stop loss over here, right? So now I'm going to go. This is the S&P. I'm going to go over here. And I'm going to say save order preset. And what I usually always do is I like to do it by tick size. So I go 4 by 16. That's how I remember. That's how I remember this thing, and I save it. Right now, it's saved. Now it's saved over here. Now I'm going to go to NASDAQ. Right, same idea. I want to do 5 points, which is 20 ticks. Oops, it's going to. And my stop, let's make it 80, just for argument's sake. Okay, and now I'm going to go over here. I'm going to save preset. I'm going to call it 20 by 80 because, again, I'm just doing it in ticks for NASDAQ. And if you want to, sometimes, you can do NQ to do this, for yourself. And then last but not least, we're going to do gold, which will be do 5 and 20. And I want to go over here. I'm going to save this. I'm going to go 5 by 20 underneath GC. Okay. Right. Save. All right. So now let's say I'm in NASDAQ. I go over here into presets, and all I got to do is select this, and it's all automatically done. See how easy it is? It's like a template. You just simply go through this. I'm going to have a little video on this for everybody. We're creating actually a whole bunch of really, really cool free content for everybody on our BK website that everybody is going to be able to log into. Just finished up the courses over this weekend. I'm going to do some more. So all of this stuff is going to be on video, and you can watch it on demand. But yeah, that's going to be that's how you do it. Okay. So we're down $200. We are down 0.5% in NAS, 0.5% in 13% in the S&P. I mean 13.13% in the S&P. That kind of stuff. So does that answer your question, KP? Hope so. All right, let me do a couple of things. Please get some Apex accounts, as I'm asking you. If you want my tutoring, tomorrow, tutoring starts again. Make sure this is correct. Huh? No? Sorry. Okay, there we go. Past the prop, I put in a link for there, and then of course to this. Sorry, I'm just I'm putting all those links in there. Okay, guys, not that many trades today. I'm sorry. Just this is just when we get a waterfall like this, and we have no, this is a super strong move right on the open. First half hour just blew through all the numbers. Boom, boom, boom. Really killed it. Yeah, you got 2 Apex accounts. Good job. Good job. Remember, the cool thing about Apex, you can buy like 5 of them for the price of 1. I get them and just, rotate through them. Trade gold in 1, trade NASDAQ in the other, trade S&P in the third. If you want to, do it this way, maybe be greedy in 1, be not greedy in the other. You can do a million different things to have that flexibility, or you can just go from one to the other. I tend to be like a person who's very serially oriented. So I traded my 150,000 last week. Today I'm trading the 50. I'm going to probably trade 50 for a couple more days, and then I'll come back to the 150. And then, hopefully we'll see by the end of this month, one of these is going to be funded, and we're just going to try to run all of these to a funded status, and then we'll just run the funded accounts. Absolutely. For me, I love this approach. This is just like, even though there's no trades right now, there'll be some in an hour, and there's always a trade throughout the day for this, for this approach. So, if you're good with that, if you understand the greedy, non-greedy paradigm, then you're very, very, very capable of using BK to scalp all this around. Okay, my friends, thank you again so much for hanging out. Tomorrow, same time, same station. I'll be ready to go with everything. I'll be in Jersey, actually, so we'll trade from Jersey. And I'll see everybody then. Enjoy, guys. Thanks a lot. Everybody take care. Bye-bye.